Welcome to Save US Taxes Legally. I want to start off with three simple questions. Put yes or no into the chat. Number one, do you want to leave a legacy for future generations? Number two, do you want all lawsuits to go away? And number three, do you want to save taxes year after year, generations after generations? If you said yes to all three questions, you're in the right location. Stay with me for the next half hour, and I'm going to teach you the secret of the rich. Imagine saving four, five, six figures in taxes every single year. You could put this money back into your business. You could pay off your mortgage. You could buy a new vehicle. You could take your family on a well deserved vacation. You can give to your favorite charity or save retirement. Imagine nobody knows what you own, how much you own, where you own it, what you do with it, and how much you sell it for. Imagine all lawsuits become frivolous, how much time, money, anxiety, worry just go away. This is the power of the tax shield method. I want to teach as many US investors, US business owners, US entrepreneurs, and US 1099 income earners how they can save taxes just like the rich do. This is not taught in school. I believe since I learned the secret of the rich, it's my duty and my honor to teach it to others. I also believe that the playing field must be leveled for everyone. Now, to give you a little bit of history about the Spendthrift Trust. It comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, started the Church of England. He went to go tax the lords and ladies of England, and they went back to the 13th century to the Magna Carta and said, "Oh, no, 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 King Henry VIII, you can't do this." It's contract law that came to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023. It started before we were a country. Our current tax code that we're under currently went into effect February of 1913, was only supposed to be around for a few years. Unfortunately, we got involved in World War I, and it has stayed ever since then. It's grown and grown and grown and grown. The super rich families of 1913, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys, made sure they could save taxes. Well, if they can save taxes, we can save taxes. My name is Sally Gimmon. I'm the owner of www.thetrustisyou.com and also a free class on the Great Discovery. Put my first name and my last name together, and you'll get a 23-minute presentation, 3 articles from Forbes magazine I did not write, 2 pages of case law so you can research this to your heart's content, and examples of clients saving thousands of dollars. So let me share my screen. Give me 1 second. So, uh, the website, www.thetrustisyou.com. You're going to save taxes legally. You're going to leave a legacy for future generations because this goes from generation to generation. All lawsuits become frivolous and everything's kept private. Now, this next page. Whoops. Go away. You weren't supposed to do that. Yikes. This next page. Page down. Come on. This is what 2025 tax code is like. There are 4 ways to file your taxes. Most expensive way is single. Then there's head of household when you have children under the age of 18. Married filing separately. And the cheapest way, married filing jointly. Now, on January 1st of 2025, the IRS quietly changed the tax code. Check this out. Single is the exact same amount as married filing separately, all the way up to the 37th percentile. It's more expensive to be single than it is to be filing married but separately. You learn nothing else from this seminar. If you are married, file jointly. It will be so much cheaper for you to do that. Um, so it depends how you file your taxes, how much you pay in taxes. My personal story, I became a real estate investor when my mom got sick in 2018. In 2019, with my mentor, I wholesaled 7 bank-owned properties nationwide, and I had put $50,000 into my bank account. to pay for my capital gains. On April 4th of 2020, my CPA called me to say congratulations. I made so much money in 2019. My tax bracket went from 22% to 24%, and I owed $94,000 in short-term capital gains. We were doing bank-owned houses. Everything shut down when COVID started. I had no money coming in, and I only had $50,000 saved. I had to learn the secret of the rich. Now, I want you to do as much research as possible. If you Google tax code 643B, please do, you will find an opinion letter dated September 11th, 2018, where the IRS specifically says they do not like tax code 643B and they do not like the irrevocable, complex, discretionary, non-grantor spendthrift trust. It's their opinion. In my opinion, I do not like lima beans. Please do not make me eat them. Now let's go over these 5 elements because you must have all 5 elements to make this true. Irrevocable. This goes from generation to generation to generation. The Rockefellers Spendthrift Trust is 7 generations old and has over 400 people using the same EIN or employee identification number. Each separate family files a separate 1041 tax return, but they all get to save taxes. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. 97% of the trusts sold in the United States are what's called the family trust or the living trust. My mom and dad had the family trust. Both of them started it together, and when both of them had passed away, the trust ended and all their property got split up. This is not your mom and dad's trust. This is what the Rockefellers, the DuPonts, the Carnegies, the Kennedys, Donald Trump, Robin Williams. This is what the rich people have. Discretionary. Whoever is a trustee or trustees can make the rules for all the beneficiaries now and from the grave. There's no infighting. There's no contesting the will. This stands as law. One clients of mine, a husband and wife who have 4 apartment buildings in Los Angeles. Their adult daughter lives in one of the apartments and has a slight problem. They're requiring her to do 4 random drug tests per month so she can stay there living rent-free. She actually took her mom and dad to federal court and sued them. The judge read through the trust and he told her she has 2 options. Option A, pass the drug tests and live rent-free. Option B, move out and start paying her own rent. I do not want to be invited to their Thanksgiving. Non-grantor. This makes the trust completely private. When you have the family trust or the living trust, my mom and dad were the grantors or the settlers of the trust, and when they pass away, the trust ended. With the Spendthrift Trust, you're going to have someone who will never be a beneficiary, someone who will never be a trustee, will be the grantor or the settler of the trust. They grant the trust, and then they sign themselves away. They have no access to the trust. They can make no changes or anything else. This makes the trust completely private. The last element, spendthrift. This has been in front of the United States Supreme Court on 2 separate occasions, and it's won both times. You can't be more legal than that. The next page. Now, Paul Benson was a Harvard law professor. 77 years ago, he wrote 5 specific trusts. We're going to talk about the 2 major trusts here today. Now his grandson and great-grandson run the law firm, and in 77 years, not a single trust has ever been audited. His grandson and great-grandson want to keep the name as pristine as possible. They give you a certification saying if you get questioned by the IRS, they will defend you free of charge. In 77 years, it's happened once, only once. So this is the business trust. This is for all U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. You will save at least 90% on your federal income taxes yearly, and in 43 states no longer pay state income taxes. This is a client who called me on January 3rd. He's a salesman. He's single ladies in Virginia. He works for a military contractor. He knew in 2024 he made $150,000 in 1099 income. He had nothing to show for it. He lives in an apartment with 2 roommates and drives a 10-year-old car. So we use the same figures, $150,000 for 2025 numbers. His gross federal taxes would be $28,847. Saving 90% would be $25,962. He lives in Virginia. State income taxes are 5.75%, which is another $8,625 saving. For a full year, he would save $34,587, or per month, $2,887. This is his money to do whatever he wants. His comment to me was he wants to save the $34,587 and in 2026 buy his own personal house in Virginia. I wish him well with that. Again, if you're making at least $100,000 gross, you could be saving 5 figures in taxes every single year. And pass this on to generation after generation. Now, my personal story. As I said, my mom got sick in 2018 and I became a real estate investor. I purposely bought a bank-owned reverse mortgage contract in North Carolina so I could write it off on my taxes. I paid $20,000 for the contract. It was going to go to auction for $50,000. That $30,000 spread in between at 24% tax rate would be $7,110. It didn't, because of COVID, it did not go to auction until August 28th of 2021. The final bid for it was $64,326. Without lifting a hammer, I made $44,326. Woohoo! The way I like to invest. More importantly, at 24% tax rate, I got to save $10,368 in capital gains. I put that into more real estate and have grown it and grown it since then. Now, the beneficial trust saves 5 taxes year after year, generation after generation. You will no longer pay capital gains when you sell something at a profit. Short-term capital gains are a year or less and affect you when you sell crypto. You are an options trader, you're a forex investor, you wholesale, you fix and flip, you do auction houses, or you do tax liens. Long-term capital gains are a year or more, and I'll get to that in just a second. You'll no longer pay interest income taxes, same as federal income taxes, for if you're a passive investor, you're in mutual funds, you're in a REIT, you do subject to real estate, you do the BRRRR strategy, you have notes, you're creative financing, seller financing, or you're a forex investor. Yes, forex investors, you get taxed twice, capital gains and interest income taxes. You need this trust. Dividend income taxes. If you're in the stock market, you're a day trader, you're doing futures trading, you're doing commodities, or you're living off of dividends. Again, taxed just like federal income taxes. Rental income taxes. If you have short-term rentals like Airbnb, vacation rentals, maybe you have 5 doors, 10 doors, 20 doors, 100 doors. You're in multifamily, you're in commercial property, you have apartment buildings, or you're doing Airbnb arbitrage. Yes, you can move a property that has depreciation schedule into the trust. Yes, you can move a property on a cost averaging scale into the trust. Because remember, your information is completely private. 40% of all LLCs, S Corps, and C Corps get sued every single year. Each LLC, S Corp, and C Corp is state law or statutory law. Excuse me. We do not have them in the trust because it's on the federal level. Talking about lawsuits, all lawsuits become frivolous and go away. So if the register's dog gets out and bites the mailman cannot sue the owner. The one tax that's not on here is royalty income taxes. They're taxed a little bit less, 7 different layers, but between 10% to 35%. So if you are an actor, an actress, maybe you're a musician, maybe you are an author, an artist, you have copyrights, you have intellectual property, or you could be saving thousands of dollars. Now, long-term capital gains. Again, when I was back here and said short-term capital gains, so just like federal income taxes, long-term capital gains are either 15% or 20%. And they affect you when you sell your business, when you sell an investment property or you sell a baseball card. This is a true story. An adult son saw my TikTok video. His mom and dad were selling a 42-year-old restaurant that his father and his brothers had built. They got to save $450,000 and $3 million on April 15th. Or at 20%, they got to save $600,000 on April 15th. Jim, the father, was working with a business broker. He gave me Sam's phone number, called Sam to tell him to change the contract. Sam's like, hey, I make 1099 income. I'm a business broker. I'm going to make $30,000 on the sale. I've got several other sales coming up. Let me get the business trust. I tell him about my affiliate program. Sam calls Michael, the gentleman who's buying this restaurant. It's his 7th restaurant in 3 different states. Michael gets the business trust, and Sam made $1,000. Now, I did this program very quickly. Everyone's got a different situation. So if you would like to find out more or have a conversation with me, my calendar link is www.thetrustisyou.com/scheduling. And again, my free class on the Great Discovery is www.sallygimmon.com, where you'll get 3 articles from Forbes magazine, 2 pages of case law, examples of clients saving thousands of dollars, and also a presentation similar to this. My goal is to teach this to as many U.S. investors, U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and 1099 income earners. If the rich can save taxes, everybody else should know how to save taxes. Thank you for watching my program today. I hope you have a wonderful August. Take care.